Well, good afternoon then, folks, as we head into US trade on Tuesday, the 22nd of August. It's pretty much a similar story as it was earlier on. We'll have a flick across some charts now in a minute and we'll see what's going on. Some pretty broad-based US dollar strength within the last hour or two of trade, which we'll have a look at once we get around to it now in a minute. But stocks set for a higher open on Nvidia earnings optimism. I say it's more probably to do with a slight bit of a pullback in yields, certainly across this morning when stocks were up quite aggressively. Yields down, stocks up, does make sense. Not really in line with what we've been seeing over the last number of days. The US dollar was weak. In this morning's video, we were looking a bit bearish in the US dollar, but had a pretty strong bounce back across the majority of the currencies throughout the course of lunchtime, really, in the European session. Apart from that, you're kind of lacking fresh news flow. I mean, you got Nvidia earnings later on. Keenly awaited earnings report kept mega cap stock growth stocks on a strong footing, which obviously, if the largest stocks keeping supported by positivity or optimism surrounding earnings, then it does lend a bit of support to equity markets across the board. But we'll jump across here and you can see maybe a little bit choppy. The Japanese yen, Swiss franc, pretty choppy. The US dollar, pretty choppy. You do have your Aussie and Kiwi higher in line with stock indexes higher across the board. Now we've seen an aggressive move over the course of this morning, higher on stock indexes. Now they've put that down to a pullback in yields, into some positivity surrounding the potential positive earnings from Nvidia, keeping, as I said, mega cap growth stocks supported. But in reality, trends have been quite clearly established over the last number of weeks, so a bit of a pullback ahead of Jackson Hole really isn't too surprising, to be perfectly honest with you. Not much going on in the commodity space. Yields pretty mixed, but I'll have a look at some charts when we get around to it in a minute. But US data later on, I'll say US data with a few speeches from some Fed officials. 3 o'clock, got some housing figures from the US. Not exactly high impact, medium impact data releases, but if they do come in positive, it will go in line with the economic data that has been strong out of the US. And you're hoping for that to continue, or you would hope for that to continue, which has been a reason for longer dated bond yields to continue pushing higher. But you can see euro tanking at the moment. You can see cable pretty aggressively lower. Dollar yen pushes higher. Dollar Swiss, dollar CAD not doing too much. The dollar index as well. But your Aussie, Kiwi and CAD kind of being left behind, but it's probably a good thing being left behind, the fact they're not weakening. But pretty broad-based euro weakness over the course of today's session. Not too clear as to the reason behind it just yet, but these bond yields after the pullback have started to push higher again over the last hour or two. Now the 2-year making another attempt through that 5% level, which it did briefly break in yesterday's session, heading up to the close yesterday. That did fail, and we are having another attempt at 5% today, or right now, should I say. And you have to imagine that folds at some point. And the upside in equities off the back of the pullback in yields have turned around. They start to rally again. Is this the turnaround in equity markets? Do we get an unwinding of these long positions into today's US session? Remains to be seen. Over the next couple of hours ahead. Equity markets, as you can see, pretty strongly higher across the board. The S&P, Dow Jones kind of being left behind, but the S&P, the Nasdaq obviously moving with Nvidia, Russell, DAX, the Euro stocks all pushing higher pretty aggressively. But if those US bond yields continue to push higher, if we manage to break 5%, manage to get up 4.35% on the 10-year, that then is not good for stocks as we head into the rest of the week. Now if that trend does continue, you break through these highs and show continuation of these trends in yields, that should be supportive for the US dollar and should be negative for equities. Especially this S&P does look vulnerable up here, as well as this Nasdaq's it's rallied pretty aggressively post or certainly since the start of the week. If those yields do push higher and get above that 5% and 4.35% on the respective yields, it's probably not a good sign for the Nasdaq. Couple that with, you've had positive results out of positive data out of America, so you'd probably imagine Nvidia continues to you probably imagine Nvidia has somewhat decent earnings compared to the strength of the US economy. But if those yields continue higher, the S&P does look somewhat vulnerable. The Dow Jones did not manage to sustain much upside and is selling off quite aggressively now as we head towards, or as we have had the US Open. So these bond yields will remain in focus. If these continue higher and get above these highs here, that should be negative for equities and should see them back, a good 30-40 handles on the S&P, at least back to these lows here, maybe even further below that. So the bounce back does not seem to have the follow through at the moment, as the pullback on these yields has not had the follow through. And if that continues, support for the dollar, negative for equities as we head into a pretty dry day of economic data this afternoon.